Tether is launching a gold-backed stablecoin, something that we didn't think we were going to see this week. The new coin will be called Alloy, AUSDT, and is mintable on the new Alloy by Tether platform. According to the company, Alloy will be collateralized by Tether Gold, a token that provides ownership of physical gold but pegged to the US dollar. By definition, the new token is a synthetic dollar, which is designed to mimic the value and functionality of the US dollar without being directly backed by it. In the same thread, the organization said other tethered assets, including yield-bearing products, could be created on the platform. AUSDT was developed by Tether subsidiaries Moongold and Moongold El Salvador. Alloy by Tether will become part of a real-world asset tokenization platform launching later this year, according to Tether's CEO. Does the U.S. economy need interest rate cuts? That's something that's been debated over the course of the last couple of years so far. The U.S. economy is cruising along well, and there's no urgent need to slash interest rates. John Williams, president of the Federal Reserve Bank of New York, has made it clear that the economy is on a positive path. However, the Fed president isn't committing to when he might support cutting interest rates. He emphasized that any decision about easing policy this year will depend on incoming economic data. He highlighted that recent inflation figures are promising, and he expects price pressures to keep easing. Williams noted that there are positive signs of supply and demand balancing out. He said that he sees a disinflationary process continuing. He said also in an interview that he expects inflation to decrease in the second half of this year into next year. The US dollar is suffering a stealth erosion, according to the International Monetary Fund, as the Federal Reserve is gearing up for a new global liquidity cycle that could boost the Bitcoin, Ethereum, XRP, and other crypto prices. It's not so good for the US dollar. So strikingly, the reduced role of the US dollar over the last 2 decades has not been matched by increases in the shares of other big four currencies, like the euro, the yen, the pound. Rather, it has been accompanied by a rise in the share of what we have called non-traditional reserve currencies, including the Australian dollar, Canadian dollar, Chinese renminbi, South Korean won, Singaporean dollar, and the Nordic currencies.